Since we've known or talked about the errors that affect the trial balance, let's talk about the errors that could happen or occur in preparing a financial statement, and such error will not affect trial balance. Now, errors that do not affect the trial balance. As earlier discussed, the agreement or equality of the totals of the two sides of the trial balance does not indicate an error-free ledger. And the essence of the trial balance is mostly to prove the arithmetical accuracy of the entries in the ledger. It only shows that every debit entry has a corresponding credit entry, vice versa. Let's talk about some errors that may be committed in preparing it in the trial balance, but still the agreement will still occur. That is, the trial balance will balance up. Let's take the number one. We have the error of omission. Error of omission now. This is a situation where a transaction is completely omitted from the books. For example, there is no debit or credit entries at all. That is, there is no debit or credit entries. No entries was made for the two. And the transactions is not captured in the subsidiary books. This type of transaction will not affect the agreement of trial balance. The next one is error of commission, which is number 2. For error of commission will also not affect the agreement of trial balance because it is an error committed when the transaction is posted to a wrong account, though in the same class of accounts. For instance, a transaction meant to be debited to Joyce is then debited to Jane. It is very crucial to know that the correct class of accounts and correct amount was posted, but to the wrong account. It's not as if it was not posted. It was posted, but into the wrong account. This type of error will not make the trial balance not to agree or balance. It will always agree. The third error that will happen and will not affect it is error of principle. This error of principle is a type of error that is made if entries are posted in the correct side of the ledger, but into a wrong class of accounts. For example, a fixed asset account such as a motor van transaction, which is being debited to an expense account, such as motor car expense account, instead of fixed asset account. Number 4 is a compensating error. This type of error will also not affect the agreement of trial balance because this error occurs when two errors in opposite side of the account cancel out each other by being equal in amount. Two errors in one or two different but opposite accounts, it will cancel each other. For example, sales account may be understated by 300 naira and salaries account equally understated by the same amount, which is 300 naira. When this type of phenomena happen, the two errors will compensate each other and it will not affect the agreement of the trial balance. Number 5 error that will happen and will not affect the agreement of trial balance is error of original entries. This type of error arises when the original figure posted to the subsidiary book was wrong, yet the double entry principle was properly observed using the incorrect figures. For instance, if credit sales of 115 naira was entered as 105 naira, which was being debited to the personal account, and the same 105 naira was credited into the sales account. This type of error, if it happens, it will not affect the agreement or the balancing up of any type of trial balance. Number 6 point to note is complete reversal of entries. In this type of error, the correct accounts are used, but each item is shown on the wrong side of the account. Let's take for example, a cash paid to class by Clement was wrongly debited to Clement and credited to Clara. This will definitely give wrong balances for Clara and Clement's balances, but it will not affect the balancing up of the whole of the trial balance.